Good afternoon, everybody. Uneducated Economist here. Gosh, what a beautiful day. You wouldn't believe it, but it was actually raining just a few hours ago, and now look at it. It's just absolutely beautiful out. Wanted to talk a little bit about the central bank digital currency coming out of Japan, because I found an article from the Asian Times talking about the Japanese central bank digital currency, and it falls right in line with everything that I've said about the central bank digital currency and the real reasons why they're pushing so hard for the central banks to go into a digital currency. And now a lot of people will argue digital currency, saying that well, the dollar's already a digital currency because you got your credit cards and debit cards and stuff like that. It's a different type of currency. This is a currency that never leaves the banking system. This is a currency that is going to be different from the cash. There's going to be two currencies: the central bank digital currency, and then the cash that you know as the currency that we have today, which is used digitally. There's going to be two different ones. And the whole point of it is so that central banks can take interest rates into negative territory. The problem with taking interest rates into negative territory is that the moment that you do that, people start getting fearful and they start pulling their money out in cash. And as long as you still have cash in the system, then the central bank digital currency will not work. So you have to have two currencies, and they have to have different values to them. Now, when they institute this thing, it's going to be a one-to-one trade. It's going to seem just as simple as using your debit card. It's going to be very integratable, okay? But then as time goes on, they're going to push interest rates into negative territory, and you will be forced to spend your money, or you're going to lose it to negative interest rates. And most people, when this starts to happen, they'll pull their money out in cash. So what they will do is they're going to take the cash that's in the system and they're going to devalue it to that digital currency that's out there. So once you have cash in hand and you go to deposit it into the bank, you'll only be able to deposit, say, $100 you want to deposit, you may only be able to deposit 98 e-currency, okay? This is the way that they're going to pull cash out of the system, because nobody's going to want to hold cash if they get devalued when they put it into the bank, and nobody's going to want to hold it into the bank if they have a negative interest rates, which is going to force you to spend your money. Okay? This is the whole point of the central bank digital currency. Now, a lot of people argue it's about tracking and taxing and control and stuff like that. Yes, absolutely. It definitely can be used in that manner. But that's not the point, because right now they can already track and control everybody. If you do not pay your taxes and they figure it out, men with guns, if you resist anyway, men with guns will come and take everything you own and haul you off to jail. So they already control everything. But this is going to make it easier to control. It's going to make it easier to tax. It's going to make it easier to track, okay? But the whole point of it is to take interest rates into negative territory. That's the reason why they want to institute this central bank digital currency. And it's interesting, if you go and you read that article, they have one sentence that says people will, when this whole thing takes place, that people are going to want to get into gold. There's one sentence that says that in there, and they never talk about gold or anything else or the reasonings why. They just say it. They just say it just like that. So that's also kind of interesting inside of that article, to think that, gold is going to be a vital monetary asset if negative interest rates starts coming into play. Because you think about it, everything out there is a promise to pay. Everything. I don't care if you own stocks or bonds or houses or anything else, it's always somebody else's promise to pay that's going to get you the payoff, the money, okay? If somebody can't get a loan, they're not going to be able to buy your house, and if they can't buy your house, you're not getting the money. And so there's always something out there that is a third-party element of debt that relates to all assets out there, except for the physical assets in your hand, okay? Now, to continue on with this, the central banks out there want to create inflation. They want people to start spending their money. They want to create money velocity, okay? And the only way to do that is to get people to spend. And so they have to have this confidence. They have to have people thinking, okay, I am willing to go out there and take out a debt and buy a car or go on vacation or buy a house and spend that money. They have to take out a debt and spend it into the economy. And the Federal Reserve is desperate to try and get people to do that. They have, in the past, dropped their interest rates around 5% during a time of crisis or a time of recession in order to get people to go out there and do that in order to stimulate the economy. They ran out of room this time, right? They were at 2.5%. And you notice that the moment that they started raising the interest rates is when we started having the problems. And then remember way back before all the pandemic and everything else took place, they were back there saying that they were dropping interest rates or stalled out on the interest rate hikes. Remember, they were on autopilot, that's what they called it, where they were just going to incrementally kick up the interest rates. And they had to almost reverse course as soon as they got started on this thing in order to keep the economy from completely collapsing at the time, I'm assuming. And then they started dropping the interest rates again. And now they're all the way back down to zero. They have no more room. They were only able to drop it around 2.5%. So now they're stuck, right? They didn't get enough of an interest rate drop to stimulate the economy, and that's why they went into the massive stimulus programs between the government fiscal policy and the Federal Reserve's monetary policy. The two efforts combined has still not brought the economy back up to a condition in which that it can start running on its own. They were like attempting to jumpstart the economy, to like get people out there and start spending again. Now, you can blame a lot of it on the pandemic, on the COVID crisis, whatever it is, whatever you want to call it out there. You can blame a lot of it on that, but you can also see that the economy was starting to roll over prior to that taking place. That was the whole point of the insurance policies. And when they dropped it all the way down to zero, they lost it. They have no more control over it. You can go out there and you can look and you can see that the Federal Reserve over the last few weeks have cut back on their balance sheet. They have actually removed $250 billion from their balance sheet. But considering that they're up to $7 trillion, it's really not that much money. And you notice the moment that they did that, now we're starting to hear talk again about the economy starting to roll over, starting to flatten out. Federal Reserve presidents from all over the place were saying it just a week or so ago, and there's articles all over the internet right now talking about how the economy is starting to top out. And if you think about it, with the Federal Reserve ending their repo program and they're cutting back on their balance sheet, it's not going to benefit, the continuing recovery, I guess is the way they want to put it, if they do not continue to stimulate the economy with, more fiscal stimulus, coming out of the government with stimulus checks or, granting money out to the businesses or whatever is out there. If they don't continue to do that, then we're going to have a continual contraction of the economy, which we're already experiencing. I think China was the only one who has a GDP that's positive 1%. Everybody else is going to be, dropping in gross domestic product this year. So we're in a situation right now with these central banks desperate to try and get people to spend money out there. And the way they're going to end up doing it is with that central bank digital currency. What they're going to do is they're going to, and I thought about when they put this money into your wallet, because what they're going to do is you're going to have an app on your wallet or, on the computer or something like that, where your digital currencies are kept. And the way they are going to, I thought they would force people to spend their money by saying, hey, you're going to have to spend it on this particular, direction. You got to spend it on automobiles, or you have to spend it on food, or you have to spend it on, whatever they want to go with the money, wherever they want you to stimulate. Maybe it's spending it on hotels or something silly like that. But they can stimulate particular industries within the system if you go that way. But that doesn't appear to be what Japan has in mind, or at least not according to this article. They're just going to put it into the digital wallet, and you don't get any more unless you spend it. You'll get $1,000, and until that $1,000 is gone, you don't get any more, which is going to force people to want to spend it. Anyway, what else was I thinking about today? Oh, that was the other thing I was thinking about earlier. A lot of people don't remember or don't even mention the FASB 56. Remember that? This is where the government can pretty much outright lie about the financial conditions, the numbers out there in order for national security. And I was thinking about that. It was just wow, if this is the lying numbers that they have, I wonder what the real numbers are like. It's meant to be conducted in a way that that it doesn't affect your investments and stuff, but we know that ain't right. Anyway, I think I'll just leave it at that and see what you guys have to say about that. I'd love to hear what your comments are there in the comment section, and maybe I'll just let you guys hang out for a little bit and enjoy the scenery. Uneducated Economist, you guys let me know. Hey, how about a shot of the river here real quick? I'll give that to you guys before I turn the camera off. So that's the pilot boat right there. What he does is he goes and picks up the bar pilot. So when these boats come in, when these big freighters come in, before they come into the river, they'll fly a helicopter out there with the bar pilot. That bar pilot will guide them into the river, and then once they get to here, then that boat comes and picks up that bar pilot, takes him back to shore, and drops off the river pilot, and the river pilot takes them the rest of the way up the river.